Good day, Tea with Travis. Today is January 26th, Monday, and the market's, well, interesting as always. The mortgage bonds this morning are trading kind of sideways. They're up and down, and they're getting pulled in all directions based on a few reasons. There's some pretty ugly fourth quarter reports coming out. I used to call them fourth quarter earnings, but it's actually fourth quarter losses for these companies, and it's pretty brutal in some areas. Caterpillar, the big farm like tractor giant, they obviously do a lot of industrial type vehicles, but they reported huge losses, and they're laying off 20,000 of their work staff, and that's nearly 20% of their workforce. I think there's over 100,000 employees, and they're cutting 20,000, so that's pretty ugly. Home Depot's laying off 7,000. Sprint is laying off 8,000. And I imagine we're going to see some other ugly numbers from the telecom industry, just based on the fact that people are cutting costs and they're getting rid of their home phones and going with their cell phones primarily. So the telecom industry is in pretty big world of hurt as well. So with these big numbers coming in affecting the stock market, you would think the stocks would be down and bond pricing would be really improving. But then on the flip side of it, bonds are being pulled because of inflationary pressures. Comments made by one of the Fed chairs on Friday in a conference. He was talking about how with all these new programs that President Obama is talking about doing for infrastructure and stimulating the economy, obviously that's going to push up inflation, because when they continue to print money for these bailouts and for these new programs for new jobs and things, well, it just means their money becomes less valuable in other currencies and other economies. And so there's already inflationary fears for the summer, so there's almost going to be a big jump in interest rates, they feel, because the Feds will be done buying mortgage-backed securities. As I commented in the past weeks, the Feds are committed to buying $500 billion in mortgage-backed securities. Well, they've already spent $40 billion and got another $420 to go. But when that ends June 30th, it expires. Between that and other inflationary pressures, we may see a big jump in interest rates. So some concerns for bonds right now. It's kind of, they're being torn in all directions. And then also, kind of on the flip side of that, good news this morning for housing. You would think, if you see on the headlines this morning, existing home sales were up, as well as beating projections or estimates. Well, it's kind of a bittersweet number, because the reason existing home sales are up is based on all the foreclosures and all the short sales and all the great deals that are out there. So it's not because the economy is improving and these housing just taken off. It's simply because these short sales and foreclosures are such a slash price deal. If you get a house 50 cents on the dollar in Arizona, then of course the home sales are going to go up. So a little bit deceiving there. Outside of that, we do have these inflationary pressures, but we should still see mortgage bonds improve, or pricing, and mortgage bonds not improve, but actually pricing improve. And there's a separate thing, as I mentioned in my video yesterday if you watched. Mortgage bond pricing is different than what we're being offered at our level to be able to offer the rates to you, the client, just based on supply and demand. And so some of that supply and demand should be pushed through in the coming week or two, as long as the bonds don't keep deteriorating. They're about up or down 9 this morning, 9 basis points, not a big deal. So, but again, it's hard for me to explain where rates are going to be tomorrow because of the supply and demand issue. Bond pricing should bring rates a lot lower, but the investors are keeping the money right now, just based on the fact they can't process that many loans. So that's going to update for today. No real clear direction for you, so it's probably clear as mud after this update. But I just wanted to share what's going on with mortgage rates right now in the financial report. So feel free to call us anytime, and click back on the webpage here to connect with us. We love to serve you, and have a great week and be blessed.